Good evening to all of you. Welcome you to today's webinar. Today we are going to review what happened in this week, both Nifty, Bank Nifty and some stocks. Now, you are all familiar with the market developments. Market has been very volatile in the last couple of weeks itself. So the major thing right now is volatility. And there is a swing in Nifty basically between the 17,000 and 17,700. So I think it is swinging wildly in this range. So we need to see a break above 17,700 or 800 levels, or we need to look at a complete breakdown below the 16,900 or so, right? So that was the last low approximately it was made. So either we need to see one of this happening before the next big downfall could take place. Now it looks as if the consolidation mode can continue without much of a break below 16,900, because there will be a lot of supports coming in this particular place, and we have to see whether it's able to break above 17,700, 800 levels. So what are the factors which are preventing either on the lower side or on the upper side? Now if you look at the factors, one is that Indian interest rates, RBI kept rates steady. So that is a very positive thing, because if only RBI had increased rates or probably had announced that they are going to increase rates, so Indian market would have probably tanked more than what happened today. So RBI has helped the market in an indirect manner, and has also supported the government's budget, because the budget aims to invest heavily in infrastructure. So in order to support that type of investment, they needed a very steady interest rate despite inflation going up. So inflation is a problem, but RBI has said that probably growth has to be given more priority right now than inflation, and so they have kept rates steady. So probably for another 3 to 6 months at least the rates are likely to be steady in India. But contrarily, in the global markets, US interest rates are set to rise aggressively, because yesterday the main reason why the market tanked is there were some comments by some Fed members that Fed has to increase rates aggressively, not by small basis points, but it has to act aggressively. And US CPI data, which is a measure of inflation, now came to be at 7.2% year on year, which is the highest since 1982. This is the highest since 1982. So this is another factor that probably was a trigger for the market to fall heavily yesterday. And Indian markets generally move in tandem with US markets. That's what we had mentioned earlier also, that if USA gets into a problem, at least the USA market gets into a problem, other markets generally follow suit, and Indian markets are more or less tied up with US markets. And one reason that we see is because of heavy FI selling, because FI normally sell in large cap stocks, and large cap stocks constitute the index. So primarily when they say large cap stocks, the index has a beating, so the headline is the index falls more. There are of course many stocks in the mid cap or small cap probably would have done better, but that is mostly aided by domestic institutions. And now domestic institutions also, we have to see whether they will aggressively support the market for the time being. One, because probably the inflows, mutual funds flows, probably could taper off a little bit from the retail side, mainly because of LIC IPO. LIC IPO year end now, so a lot of LIC policy premiums also will be there, and plus LIC IPO is going to come next month. So there is a chance that probably this time they may look more towards investment in LIC rather than into mutual funds directly. So probably the MS inflows also we need to see whether that can be good enough this particular month to support the market. So when FI selling is taken place, normally DIS were supporting the market, domestic institutions. But here this time probably the inflows into domestic institutions as well as domestic institutions' own appetite to invest at this particular point of time, given the LIC IPO, probably could be a little less, the appetite could be less, and so that is the reason why we don't see the markets getting supported that much. But nevertheless, Indian markets generally, because of the growth story and likely upgrade of EPS, the earnings per share in coming quarters, the markets may not tank much, and already most of the important stocks have fallen. So that is IT stocks have fallen already significantly, and so there is not much of a room to fall. Last week itself, we had mentioned that TCS, HCL Tech are good buys, and we will see the chart right now. And also the commodity stocks are generally doing well, like Tata Steel, because of the increase in the investment budget time. We said that because of the investment in infrastructure here, steel sector looks to be good. And globally, India is also a second steel producer. And today, we see that Indian steel companies are looking to take advantage of the situation, and so the profitability could go higher for the Indian steel companies. So steel sector is one. Cement is likely to do well. So because of this, though, the cement and steel and infrastructure sector may do well. Then we have the banking sector, where there is a lot of value buys in PSU stocks, like PSU stocks like SBI. Okay, another some of the PSU banks are now having a turnaround. SBI announced good results this time. And so SBI, they expect another 20-25% upside possibility. At least 650 to 700 is what is being projected for SBI. Then we have got other stocks like ICICI, which have also done extremely well as far as result is concerned. HDFC Bank already has fallen, and so probably it may get support. So these stocks, important stocks in banking, probably could support. And so when we saw today the Nifty falling, Bank Nifty did not fall much. The Bank Nifty held. Okay. So Bank Nifty looks to be good, and Bank Nifty has also got 30-35%. So Bank Nifty is doing well. IT has fallen mainly because of profit booking, because last 2-3 years there's been a very good run in IT sector. So some profit has come. Now with that, the expected thing is that IT also could bottom out. So IT, banking sector is likely to do well. Commodity companies, infrastructure companies are going to do well. In auto sector, it is split. Like for example, those who are moving towards the EV vehicles, like particularly Tata Motors, are expected to do well. Okay, and they are doing well already in stocks. They are not falling much. So with all these things, and Reliance is an evergreen stock, L&T. So looking at the big caps, the chances of a further fall looks to be limited. So even in the case of Reliance, it is at 2300, right? Close to 2360-70 levels. It came down to 2300. It had gone up to 2800. So 2300 is 500 rupees fall, which is more than 15%. So okay, 15-16% fall already has taken place in Reliance. So with all these things, it looks as if the fall has already been good enough. So that's the reason why we feel that the fundamentally not much it can push itself much down below 16,800-900 levels, unless we see a meltdown in global stocks because of the fear of inflation and aggressive rate hikes. Because in chart, if you look at it, S&P, the global S&P index, which is a very important thing to measure, because normally most of the markets will follow through the S&P 500, and S&P 500 is not looking that good in chart. So somewhere it has to pick up. Otherwise, probably the rise of the Indian markets will be checked. So we could see more amount of consolidation and swings that could take place, probably with one just push down on the downside, because it's not the question of the companies doing well here or there, but question is the liquidity. As the liquidity drove the market higher, probably a little bit of sucking of the liquidity could push the market lower. Okay, and that time could probably look towards the very important time for buying. So already the market are down something like 8% or so from the top. And when it came down to 16,800 or so, it was around 11-12% fall. So these are good areas for investment, considering the Indian growth story. Now, probably another 5% fall if it happens also, then it should be picked up. So if we look at it from the investment angle, we have said that index should be bought, or the ETF should be bought, and also some of the stocks should be bought. Question is, how do you do an investment? We have already mentioned that it is better to go through the SIP route. And when we had seminars on mutual funds, we have already mentioned that probably we should be looking towards either mid cap or large cap or multi cap, whatever mutual funds that you go, look towards SIP in a volatile situation like this. Okay. So having said that, we will now look at the chart. So these are the factors that major market is now afraid of, the aggressive interest rate hike, and that is what is probably putting enough pressure on the market. So let us look at how the markets are now faring in terms of chart. We look at the Nifty, we look at the Bank Nifty, we look at some selected stocks also right now. So we'll go to the chart. So we are using a trading view chart here, and we have displayed the Nifty index, spot index Nifty, And just look at the last couple of weeks, that is emanating from December middle itself. We have seen a good amount of rise and then fall, then fall, rise, and also typically probably it is in a consolidation phase. Normally some will even call this as a triangular pattern. So this is a sort of a formation. So probably even if it goes a little higher, we may see some sort of rise, probably even carrying to 18,200 at some stage. But clearing that this particular triangular pattern is very important. So we could see this extending. Probably we could have a symmetrical triangle, and more amount of consolidation could even take place between these level of 18,200 and 17,000. That's also a possibility. But right now we have got a smaller range, which is now the 17,600, 700, because if we typically draw the in this particular thing, the mid range is around this. So if you look at it, many times it has stopped around 17,600, where we are keeping the chart right now. So you will draw the line there. See, this line represents the almost the mid range. We see a huge amount of consolidation, and every time it goes closer to 17,600, then it around that level it keeps falling, right? So this is a very important, because one year we had a second thing here, then today yesterday's thing is also closer to that. So there are many days where it just goes right up to that place and keeps leading. So this is a very important level to watch for. That 17,600 to 700 levels is now an important level to watch for there. And similarly, this is a trend line connecting the last important lows, and that probably could be the area where we could seek support. So the moment it starts to fall, then we should see more amount of buying immediately. So as a trader or even as an investor, for the time being, you should buy very closer to the 17,050, 60 levels, and then when it goes 17,600, sell a part of it. Then if it goes up to 18,200, sell remaining, and then again see whether you can have some retracement again to buy back. So that's one way of doing it. So if you look at it, the overall investment should be closer to the 17,000 levels right now. And then if it falls further lower, 16,500, 16,000, all those levels are good levels to look towards buying. Okay, that's on the broader scale. And right now it has to get above the 18,200 before we can talk about markets heading towards much above the 19,000 levels. So generally speaking, if you ask for what is the general level for this year itself, if at all the rally it takes place again and climbs, then probably we should see 19,200, 300 levels, okay, at some stage. But this year the profit element compared to the last year and the previous year could be a little limited, mainly because the rally that took place of last year. So considering that, probably we should the December close was somewhere. So December close is so 17,354. So even if it goes to 19,200, 1,900 points could probably mean a 10 to 12%. So this year, in generally speaking, we may not end up with more than 10 to 12% gain because of the situation in US, because of the inflation and also the interest rate hike. So this year we could see a moderate this one, but in order to capture that, we need to look towards buying below, because this last year closed at December 17,354. Even if it falls below that, at some stage there it is going to rise and give you a profit. Okay, and we have seen 18 out of 25 times in the last 25 years or so, Nifty closes more than the previous December. So to that extent, any close below 17,354 itself becomes a buy, and if it goes 4 to 5% lower than the 17,354, then it becomes a much more buyer, because even if it is going to go rally by 3-4% on the upside in 17,354, at least 5 plus 3, 8% minimum guaranteed return can be there, and the next year can see much more higher returns. So I think any investment that we should do, we should look towards the below 17,354 first of all, because that is the last December close in the present situation. And how much it will go down? It can go down to certain, now we will see to what extent will go down. We will look at the monthly pivot, yearly pivot and all. Okay, so now basically we are at the weekly review only to look at the strategy, but we will take the broader picture for investment purposes. Then we will concentrate only on what's going to happen as well, weekly Nifty, Bank Nifty, and some stocks. Now this is the so weekly, we'll just look at the weekly one and then draw the traditional pivot points. So the standard pivot point we will draw. So this is for the entire year. Okay, the entire year we are we are looking at the pivot point is coming closer to 16,464.70. So that is the last low that we have seen. So that is going to be a very important low. And probably if it goes a little higher than lower, then in that case it can go down to this particular low, which is the last low 16,410. Sorry, 16,410. And otherwise we should see somewhere around the 16,800 itself. So 16,400 to 800 itself could be a very important support level. And we need to see somewhere a break which is the 18,350. If it breaks, then probably we should be heading towards this level, resistance 19,400 or so. So we should see the range somewhere more between 16,400 to 19,400 for this year. Okay. So if you're buying below 17,050, better to buy closer to 16,500 or so, or averaged out between 17,000 and 16,500. So you are somewhere closer to 17,000. 19,000 levels plus will give you something like 12%, 13% return. Okay, or because it is not even going to be 12 months from then, so I think the return is going to be still significant. Okay, so this is how we normally for investor it is. Now we will look at the smaller time frames. Now we look at the okay. So this is the we look at the daily weekly chart now. So the weekly chart, Nifty is still looking good because higher low. We have said higher highs, higher lows. So higher highs and low, technically speaking, we are this was broken, right? So after this was broken, then this is an important support. So it came down and took support somewhere. Yeah, this was the 16,800 levels approximately, and it took support here. Now after that, again this high has been broken. That is 17,600 high has been broken. So we should see this holding up to 16,835. So unless it goes below 16,835, we can still say that the weekly chart is quite bullish and it is a buying. It is in a buyer's mode. So weekly chart is definitely still positive as far as Nifty is concerned. We look at the daily chart. Daily chart is roughly a very difficult game because if you say this is a lower, this is a lower top, this is a lower top, but we are getting higher bottom, higher bottom. So this is a consolidation phase. So it is in a little bit of consolidation phase, a little bit confused as far as daily chart is concerned because of the up and down movement. So weekly chart is bullish. Daily chart, I would say, is still sideways. So right now, any short thing can be taken profit closer to 17,000 levels. So you can now at this point of time, it looks as if you can go both short as well as long, whichever way the indicator indicates. Now coming back for this particular week, that is what is expected in coming week. We will look at the daily chart. Now we are in the daily chart, so we will look at we'll put an hourly chart and then draw the pivot point here. So now we probably we can expect that in the coming week, there could be some support closer to the 17,250 levels, because that's where lot of times it hesitated, came back, all those things happen. So good chance that probably in another 100 points from down, okay, from now we could see some support coming back. So 17,245 is one support which we can look at it. And then probably we can look at since this was cut, so this is the expected thing is 17,550 level. So the first thing that we could expect in this way is a chance that probably we could see something like 17,250, and then probably we could be heading towards the 17,000, because once this was crossed, this pivot point is crossed, then we generally expected the support to come either this place, right? So this place could be an important support. because this place was crossed. So I think now we should expect, let's hope that probably we get some support closer to the 17,250, 240, 50 levels. So 17,240, 250 will can give support and take the market back to 17,550. So that's the first expectation as far as Nifty is concerned. So now we will look at the Bank Nifty. Bank Nifty has been generally doing very well, and let's look at the weekly position that's possible as far as Bank Nifty is concerned. So Bank Nifty, this is the, of course, this is the hourly chart, but I have drawn the weekly projection as far as the pivot points and resistance there. And we should see any fall in Bank Nifty probably getting support closer to this place. So I think 37,765. Now it is 38,434. So we should be looking at some support coming closer to 37,800 levels or so. So the first support probably for Bank Nifty can come closer to 37,818 or 819 levels. And let's look at the daily chart for this. Okay, and in the daily chart, if we look at it, for the entire month of February, it is projecting, that is for the entire month of February, it is projecting that probably this will be a good resistance, that is 39,386. 39,386 is expected to be a good resistance area, and support is very strongly at this place, which is 37,320. So not for the entire month, I think this 37,320 should be a very important support. So we expect that this should hold 37,320, that is 37,320 to hold. Okay, 37,320 to hold. And so let's look at what we should do for this. Okay, now we will remove the pivot point and look at the daily chart here. So this is the 37,320. So this is expected to hold. Okay, this is expected to hold, and we will look at the trend line. So this line is holding, right? So any fall, we should get some support closer to 37,750 or 37,800 levels, which we have been talking. So very close to this, we should get support. That is this place, 37,800. So any fall, we should get support closer to 37,800 with a strong thing below 37,300. So if at all you get closer to 37,800, I think in Bank Nifty, you should look towards some investment. And probably for this month, probably in February, we could expect that it could just go up to 39,400, 500 levels. May not be much. So expect that probably 37,800 to 39,400 to be the trading range for the time being, before we see some important development happening. So if you are looking towards if you are an investor, then please look towards 37,800 and see how the Bank Nifty starts performing around that level, and then go for a long and remove that closer of 1,500 points on the upside. You can remove that. So that is as far as Bank Nifty is concerned. And if you look at the individuals, now we look at the IT Nifty IT, then probably we'll look at the weekly chart, monthly chart, everything looks good as far as Bank Nifty. This is daily chart which I showed you, and this is much better place compared to Nifty. Let's look at the weekly chart as far as Nifty is concerned. Again, weekly chart is bullish. Weekly chart is quite bullish, and we should expect this particular bullishness to continue, because right now most of the good stocks in Nifty index looks to be doing well. So I think this trend should continue, and so Bank Nifty, unless there is a fall which is below this particular low, which is the 37,319. So unless we see something below 37,320, we should be looking towards a good upside move. Okay. Now let's look at the Nifty IT and then look at the stocks. So Nifty IT, this is the weekly chart, and any upside break above this week's low probably then will make, that is, if it starts breaking above this week's low, it would indicate that we are getting a higher bottom scenario as far as Bank Nifty is Nifty IT is concerned, because this is one low, this will become another low, right? So probably we should be expecting the IT sector to start doing well if 35,380 is broken on the upside as far as the weekly chart is concerned. Now let's look at the daily chart. Daily chart, yes, it is still bearish, but any move above this particular high, because here this is a week, this is a daily. In the case of daily chart, this is a low, this is a low, so we are getting higher lows. But this is top, this is a top, so lower top. So in a way, this is not a very convincing thing because you are getting both higher bottoms and lower tops, which means it's in a sort of a consolidation pattern. So either one of this to happen. So either this has to break or this has to break. So that's why we said, no, if Nifty IT could break this 35,379, which is this week's particular high, then we could probably presume that we have seen the bottom. We have seen the bottom. So this is right now. It looks as if this is an important bottom, and this if this is broken, then this will become a top. Okay. So right now we are hoping that this can hold. If this holds, then in that case we are looking towards going on the upside. Going on the upside if 35,379 is also broken. So all is not lost for Haiti. So we could see a revival coming back there. So now we look at the individual stocks. Now we have looked at the three major indices, the Nifty, Bank Nifty, and the Nifty IT. And in Nifty IT also we will just look at the pivot point. So for this entire month, now we are projected for this entire month. For entire month, for February, probably this could be the bottom, and this could be the top, and this could be the bottom. So if you look at it, the Nifty IT also as reasonably is likely to take support in the last bottom, which is the 33,475. So in case if there is a further fall also, probably we should expect some sort of a support to come closer to 33,475 or 32,208. So we don't expect. So these are the levels where probably you can look towards even going long. If there is a further fall from this, if there is a further attack on this, then investment can become either at this place or at this place for this month. So then probably it can itself push itself a little higher. Okay. Now if you look for the entire year also, so that for those who are looking towards investing in the mutual funds, okay, so we look at the entire year. For the entire year, I think if the IT stock, if it is not to do well, if it is not to do that well, even then I think we should be looking at some sort of a support coming at this level, which is a very drastically low level. But if there is a big sell-off, then probably we should be heading towards the 29,000 levels. That is, if this is going to be hit, if 33,250 is hit, then another 10% fall is possible. And already the markets have come down by 39,000 to 29,000. If it comes, then there will have been a 10,000 points fall. 10,000 point falls will be something like more than 30-35%, and from there will definitely be a revival. Okay, so I think if there is another 10% fall in the IT sector due to global situation, it becomes a long-term investment potential. It becomes a very important long-term potential, and probably even in this year we could see a very significant rally coming from that place. So do not miss in case for an investor. Right now it looks as if this particular place where it itself can hold. So this is a place that is the 33,250. 33,250 itself will be a very important support. This place itself will be an important support. So I think we should be prepared to accept the 33,250 levels itself as an important support, and probably we could be heading towards some higher levels there. So let's look at individual stocks. We'll look at the let's look at banking sector, SBI. So State Bank of India has a potential to go either up to this level, which is now already there at this level. So closer to the 502 levels, where it is now 546. So I think this is the level 550. So 550 is one important level where now it is showing lot of no signs of wariness. So this is not the place to invest. This is not, because this is the place where probably for the entire year, if it moves up also, it can have a resistance closer to the 580 levels. So for this year, probably 580 can be a very important level of resistance. So the upside potential, according to us, it could be from 530 to 580. That's a possibility. But if it is to fall, probably we could have some sort of a pullback, which could be up to 450 levels. So I think the most important point is that for those who are looking towards investment, I think 450 is a very important level of support, and it is now at 530 or so. For long-term investment, 440, 450 is a good level from where we could see a significant rise over a period of time. So I think we should be looking towards playing some sort of a waiting game as far as SBI is concerned. So we should be quite wary of buying at this juncture itself. So we should be looking towards some sort of because a couple of months back, when it started to push itself above this particular weekly high, which is the 460, 465, then we could have expected something like a this level of 550 to come, and 550 has already come. This is the level which is 550. So above 465, 470, we could have gone for a 550 level. It's going to be 20-25% rally. That has come already. So right now, I think we should be looking towards waiting because now if it goes up, if it starts to come below this 520, it's a good chance that it can come down as well to 450 also. So SBI also, though it's looking good, it is better to wait and look at the right opportunity to buy, because these two candles are not showing good thing, because last 2 weeks it's going up, coming down, going up, coming down. So let's look at the daily chart. So in the daily chart, this particular level, probably we should see this particular level, which is the 519. So 519 is a very important support come resistance area. So if 519 is broken, then probably we could be heading back to this level of 490, 491 or 485 also. So I'll have a little bit of patience as far as Reliance SBI is concerned. Investment will come slightly at around 485, then 450. So those are the places where to go for investment. Now, if you look at the shorter term period, 1 hour chart. Now, it's very clear that this particular week, the resistance has already come. The resistance has already come for this week, and now it has started to go below this. So we should be expecting something like a 518. So I think for this week, for next week, I think from 528, the first support can come closer to the 518 levels. So 517, 518, 10 rupees drop, and if that is broken, then probably we could expect something like a 507, 508 levels, okay, to come next week. So anything between these two levels are expected around the 508, 509 levels itself is quite possible as far as SBI is concerned. If the global situation deteriorates, so somewhere around 20 rupees fall could be another 4% or so in SBI. Fall is possible in next week or so. Probably we could be expecting some sort of much more greater things to come as far as SBI is concerned after a fall. So this is SBI, and right now look at the daily chart as far as SBI is concerned. We have already highlighted that SBI probably if this area is taken off, then probably we should see then this area coming through, which is the 488 levels, which is what we said should be the goal first, and then probably this area, which is the 465, 470 levels. So wait patiently for us to get a better levels to go for investment in SBI is concerned. And as far as trading is concerned, now it has entered slightly into a sell mode because of this particular low being broken. So unless we see this top being broken, so this top has to be broken for us to look towards going on the upside. So SBI right now is not a great candidate for trading right now on the buy side. Now let's look at the TCS on the ICICI Bank. So ICICI Bank, we'll look at the hourly chart first. So ICICI Bank is first of all is getting a little closer to its uh, zone of support first this week, and then probably we could expect that since it has broken this is one area of resistance come support, and once it just broke that particular area, so I think now this could become a this has been broken. So I think right now SBI is also doesn't look ICICI also doesn't look that good, and probably a fall below this can take it very closer to these levels, that is the 770 levels or so. So even in coming week or so, probably ICICI can drop down to 770 levels, which is another 3%. So most of the stocks can correct by 3% or so. From where probably we could see some sort of a support coming back. So not much of a, because Nifty itself is around 17,374. So 3% correction means it's around 400, even 2% correction there is around 350 points, 17,000. That's what we are saying, from where it will get support. So ICICI all looks to be from around the 770 mark. Probably it can get some steam back. So we look at the daily chart. It's a consolidation phase, so it went up. So this is an important top, and right now this is also an important bottom. So I think we have to see which one is going to be hit. So 774 probably can get hit. So 774 can probably get hit, and if 774 is getting hit, then probably we should be looking more moving towards over the period of this month itself. It can drop down closer to the first this level, which is the so this is the 774. So 774, if it is dropped, then probably we could be heading towards 741. So this period of month, chances that it can go down up to 740 levels, which is from 780 and 790 to 740 is 50 rupees, which is 6 to 7%. So ideally we expect that probably it should not happen, because we are expecting 2 to 3% down on the Nifty should give it support. So which means these stocks also should be around 2 to 3%. So the 740 level should hold as far as the this particular level should hold. We are hoping that is the 778 will hold, which means 2% fall from here. Probably the markets can take some support. So this is ICICI's concern. And let's look at the TCS, which is an important stock. As far as IT bellwether is concerned, the topmost stock as far as it's concerned is TCS. And TCS on a daily chart is like this. So probably in this particular month or so, there is a chance that it can go down right up to this particular level. 3,562. Okay, so 3,550, 560 should be a very good support for this month. So if it starts falling to that particular place, we should expect some sort of a support to come as far as TCS is concerned. So we should be looking towards some sort of a buy at that particular place, and probably it can take it the 400 rupees fall. It's almost 10% from the top. Normally, I think TCS and all will stop closer to 10 to 15%. So 10% stock will be very ideal, and because for investment it can be considered heavily at that level, because if you draw a weekly chart also, you can see for the entire year itself, we expect that it could hold around this 3,530 levels. So even for the entire year also, this could be a very important support. So we expect that this will hold around this level of 3,550 or 520 levels, and then at some stage there, when things work out well, it can push itself either back to this level of this 4,000, or even exceed and push itself down to up to 4,200. So TCS, we see a potential between 3.5 to 4.2 this year. So if you buy at 3.5, chances that it can get around 20% rise from that level is very high for this year. So TCS at 3,500 can return a good amount of return from there for this year for a 20% rise. Okay, so this is as far as the TCS investment is concerned, and we will look at the other charts, which is the Reliance, where to invest. So Reliance right now itself is a for this entire year. This is one important level. I think no, this should this is 2300 levels. This is the 2320 levels, and it's now at 2376. So this 2300 levels itself is a very important level of support. So it's a very important level of support, 2300. And then it comes down up to this 2250 or 2300 will not make much of a difference there. So it should hold around this level, because this is the place where the resistance come support happen, the weekly chart. So this is a very important level, and any failure around this level probably is the worst can happen for Reliance. That is, it has the potential to swing right up to this level, which is the 1930 1940 levels. So 1940 50 levels then will come into picture. So once it starts breaking this particular 2300, then the focus will shift straight away to around the 1920 1930 levels, 1920 30 levels. So hope that, because last year almost it settled around the 1920 1930 levels last year. So the last couple of years itself, once it started to go above this, then it had a good amount of support at various levels like this. So we expect that probably Reliance can at some stage that has a possibility to dip, but the chances that it could hold on to this particular level. Okay, it can hold on to this particular level, which is the 1930 1940 levels, and or probably it can go down up to 1910 1920 levels. So 1910 20 levels can be a very important support as far as the Reliance is concerned, if there is a further push below 2250. Okay, so we need to be a little bit careful. And on the daily chart, if you look at the so for this week, it has already rallied, and it has had a resistance, and so reasonable chance that it could fall to these levels. That is the 23. This is the place, 2300 levels, which is the important place. Or probably it can just go down to this level, which is the 2280 level. So somewhere around this 2280 23 levels, 2300 should provide a support. So watch for that, for a momentum which will take it back to the same pivot point, which is 2420. So somewhere around 2300 to 2420 is the range right now for Reliance. Now when we look at Tata Steel, which is the, I think if at all you are going to invest in any stock right now, I think the best performing is Tata Steel. So Tata Steel looks to be quite good, and expect a strong support at any dips, and we will look at the bigger picture also for Tata Steel. So this year now last year when it fell below this, so then after that there was a resistance which from 1065 or so, it went up to 1200 and got resisted there for a couple of weeks, and now that has been broken. So that has been broken, and this year it has taken support closer to the same 1060. So we should expect that this 1060 or so to be a very important support. So expect that 1060 to look towards giving support, and the rally could take its place right up to this particular level, which is the 1420 1450 levels, or even to 1540 1550 levels. So I think the maximum upside right now is in Tata Steel. So from 1254 we expect that it can go up to 14 this level, which is 1440. So 1440 1250 to 1440 is 200 rupees, which is straight away will give you more than 15% shortly. Okay, I don't think there are many stocks which are going to get more than 20% return this year, and Tata Steel is one which can still give something like that from 1250 to 1550 300 rupees. It can give something like a 25% return from here. So I think Tata Steel 20-25% return is possible from here, and we will look at the, now we have looked at TCS, we are looking also Tata Motors, we will look at in the auto sector. So Tata Motors, look at the, so this week it took support here. So this is the weekly chart. Sorry, for the day, for this month itself it took support at this place. So I think this should be a good support for this month. So that is closer to the 479 mark. Now it is at 498. So for this month, maybe the 480 levels itself has given a good support. So when it started to move from 480 on that day itself, it started to rally. I think we should be just, so what we should have done is how to trade. Now in Tata Motors, we have identified that this is the place where it can get some support. So this is a daily chart, right? So we cannot allow the trade to go from 479 to 498 without us catching anything. Having identified this, we now look at the hourly chart there. So in the hourly chart, if you look at it on this particular day, it came down to that 479 mark, and then look at the S2 level, it formed the candle there. So we knew that probably this is a good level where probably it could get itself some good support. So what we should have done is that having, if we not got this also, at least on a break above this particular one, which is 488. So when it came down up to this place, now you are waiting for some momentum to pick up. So the moment it started to go above 488, then we should have gone long, putting this itself as a stop loss. So this is how we should now look towards trading here. And now this is going to be a very important low for this entire month. This is going to be a very important low for this entire month. Okay, so we can just hold on and see how much it is able to carry itself from the upside before we take a call to close the position. So this is the way we could have traded the Tata Motors stock, and we are looking at some sort of a important resistance support levels now to come, which we can identify with the help of this particular week's formation. With that, we can look at where probably for this entire week it can get support. So last week we identified that probably this is the area where for the entire month this is going to be the thing. So when it came that particular place, we should be looking towards getting in the stock. So the same thing if you look at the resistance area where we should get out. So this is for the entire month. We know this is 479 and 502, 503. So the first thing that we know is that this particular month range probably could be, first thing is 479 to 505. The 479 to 505 it could be the first thing, and then if it starts breaking above this, then probably we could head towards 528 or so, 528 or so. So whatever that we bought here, we can either hold keeping this as a stop loss, or probably look towards for since this is going to be for the entire month, probably we can see now this has gone up to this level. So we can see whether we have ability to get closer to 535, 537 levels. So which in the present market circumstances may not look great, but assuming that in this month we get around 538 or 539, in that place if it starts looking like going down, then in that case you make an exit. So the first thing that we are projecting is that 480 to 540 is possibly a range in this month. So once it starts to go closer to that place, or hits closer to that and looks like falling from that place, then you can reduce that exposure there. Okay, so when you get a pattern there, you can please reduce that exposure there. So closer to 540 levels is where we see the chances of it cracking down. So this is all the stock identification, other things that we have done. So in case if you have any doubt in today's thing, you can just let us know what exactly is your doubts now. Right, so So thanks for your attendance today in today's webinar. Next week we'll see you with some other topic. Thank you very much. Bye.